Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the world of corporate filings so you don't have to. Today, we're cracking open the latest 8K report from WESCO International, a company that probably doesn't come up in everyday conversation unless you happen to be really into electrical and industrial supplies. Trust me, by the end of this, you'll either be an expert or at least have some interesting facts to drop at your next dinner party. Let's just say there's some fresh debt in the air and a big redemption on the horizon. Let's get into it. This report is dated February 28, 2025, with some events reported occurring on that day, but don't get confused because some actions also occur in March. This report is like looking in the rearview mirror while still driving forward. First up, we have news about WESCO issuing senior notes, which is another way of saying they borrowed a bunch of money. Specifically, $800 million worth of these things called 6.375% senior notes due 2033. Notes are essentially IOUs that WESCO is selling to investors, promising to pay them back with interest. The interest rate is 6.375% and the debt is due in 2033. In the business world, you always need to be on the lookout for debt, because too much debt may signify problems and risk for investors. WESCO sold these notes for 100% of their face value. Think of it as borrowing $100 and promising to pay back $100 plus interest later. Usually companies will offer a discount to get people to actually purchase them. These notes are managed under an agreement called an indenture with U.S. Bank Trust Company. This agreement spells out all the rules and promises related to these notes and are important because it shows the conditions for the debt. After all the fees and discounts, WESCO actually pocketed about $789.5 million from this sale. So what's WESCO planning to do with all this cash? Well, WESCO intends to use the funds to get rid of some of its older debt, in particular, to redeem all of the company's Series A preferred stock, and repay a portion of the amounts outstanding under its asset-based revolving credit facility, also known as the ABL facility. Think of it as refinancing a mortgage. WESCO is using this new debt to pay off existing debts. These new notes are unsecured, meaning WESCO isn't putting up any specific assets as collateral, and unsubordinated, meaning they'll get paid at the same level as other similar debts. These notes come with a semi-annual interest payment on March 15 and September 15, starting September of 2025. That means WESCO needs to have enough cash flow to keep up with these payments. Now, WESCO has a bit of flexibility here. They can pay off these notes early, but it'll cost them a premium before March of 2028. It's like a prepayment penalty on a loan. They can also redeem up to 35% of the notes early if they get a cash injection from selling company stock, which means selling ownership of the company. There's also a clause that if WESCO goes through a major change of control, like being acquired, they might have to buy back these notes at a slightly higher price. This protects the investors in case the company's situation changes dramatically. The agreement also has a bunch of rules, called covenants, that limit what WESCO can do with its assets, like taking on more debt or selling off parts of the company. However, some of these rules go away if the notes get a high enough credit rating, which is like a report card for debt. Of course, there are also consequences if WESCO messes up and doesn't follow the rules, like missing payments or going bankrupt. If that happens, the investors can demand their money back immediately. WESCO also tweaked its existing credit agreement, or the ABL facility. They extended the maturity date to February 28, 2030. This means they have longer to pay back the money they've already borrowed. They can also borrow even more money if they need to, increasing their borrowing capacity. Think of this as increasing the limit on your credit card. Finally, WESCO amended its receivables purchase agreement, extending the termination date to February 28, 2028. This is another way for them to get cash by selling off their accounts receivable, which is the money owed to them by their customers. In summary, what does all of this mean? WESCO is shuffling around its debt, taking on new debt to pay off old debt, and giving itself more time and flexibility to borrow money in the future. It is important to understand that all this restructuring aims to keep the company stable, but it also adds complexity and risk. Now, looking at these moves more broadly, WESCO seems to be preparing for future growth while also trying to manage its existing debts. They're taking advantage of the current market conditions to refinance their obligations and free up some cash. However, this also means they're taking on more debt, which could become a burden if the economy slows down or if they run into unexpected challenges. The notable risk here is the amount of debt WESCO is carrying. While they're using it to grow and refinance, it also makes them more vulnerable to economic downturns. The opportunity lies in their ability to successfully integrate acquisitions and grow their market share, which could generate enough cash flow to comfortably manage their debt. In conclusion, WESCO's financial moves are a mixed bag. They're positioning themselves for growth but also taking on more risk. Whether it pays off depends on their ability to execute their strategy and navigate the ever-changing economic landscape. Thanks for watching. If you found this breakdown helpful, give us a like, drop a comment, and subscribe for more corporate deep dives. Until next time.